Hello, Scott Bear here at Mortgage Pro. I am part of your real estate success team here at Realty Pro, and I am here to make you successful. Now, the rates have gone up just a little bit, but we'll get into that in a moment. 30-year fixed rate, 4.875, 15-year, 4 and 8, 5-1 ARM, 3.5, 7-1, 4% even. FHA and VA both at 4 3/4, and USDA is at 4.875. Now we got some very good house data that has been released lately. Housing starts actually went down 4.3%, but the building permit starts came in at a 17% surge. So that's a very good leading indicator of future housing activity. So I'll keep you posted as far as that's concerned. Existing home sales had an increase of 8.3% over what was expected. That's very good. It effectively lowered the inventory from the November rate of 9.5 months level to a December rate of 8.1 months. That's a very good lowering of the inventory. Now, this jump in existing home sales, from what I understand, was partly attributable to the mortgage interest rates having gone up in the past couple months. I thought that was very interesting. Doesn't that seem to speak to the fact that we truly are creatures of habit? You would think that we would actually buy at a lower mortgage rate and sit secure, knowing we made a fantastic decision, knowing that we got an interest rate that is the best interest rates that we've seen since President Eisenhower was president, and we would sit securely knowing we made a great decision. But no, we don't do that. In fact, we sit there waiting for the rates to go lower when we've been told that they probably aren't going to, and then we actually wait as long as the rates to go up, and then we finally take action and are worse off for it rather than having just made a simple decision earlier and been better off for it. I found that to be interesting. We should take a life lesson from this and not act accordingly. Now, remember last week I had spoken to you regarding the producer price index, and it had gone up in the states, and it was creating a little bit of an inflation fear. Now, the same thing has happened abroad. Germany just disclosed their producer prices, and they were the highest that they've been in 2 years. So that's creating a little bit of an inflation fear. Likewise, not necessarily producer prices, but China had economic growth in 2010 of 10.3%. Now, obviously, this is fairly healthy economic growth. They need to get this under wraps and get it under wraps rather quickly, because economic growth at that rate can turn into rampant inflation fairly quickly. So the People's Bank of China needs to tighten their monetary policies here fairly soon. Also, the euro seems to be gaining a little bit of strength. Now, there are, and this of course is at the expense of the US dollar. There are some that seem to believe that the problems in the European Union are being slightly overblown. I don't particularly believe that, and the places that I research a lot of my data don't necessarily believe that at all either. But it seems to be more of a question of not if problems will surface, but when they will surface. And it will be interesting to see that when they do surface, the euro will seem to reverse its direction at its own expense, of course, but at the benefit of the US dollar. Today, the Fed bought $8.36 billion worth of treasuries through their permanent open market operations, POMO, P-O-M-O. And it's the part of their quantitative easing plan, of course, through the end of June that they're still going to implement. But that helped actually bolster the mortgage-backed securities market a little bit, and we noticed an improvement in rates towards the end of the day today. Actually, we noticed a 34 basis point improvement, which was very good. So it held rates at bay. So a very good thing. So take some of this data into the weekend and communicate it to your clients in a way that seems to flow for you. Make sure that they understand that you are the expert. Build some rapport, and let's close some more transactions. Have a great weekend. Make it successful, and we will talk to you very soon. In fact, Monday. All right, have a good one. Bye-bye.